Hello everyone. So today I'll be discussing on capitalization method. In the last class I have discussed about various methods on how to calculate goodwill following the average method, super profit method. So today I'll be discussing how to calculate goodwill following capitalization method. So in order to understand capitalization method, you need to first properly understand how to calculate goodwill following average profit method and super profit method. I'll be using the same slide to explain how to calculate goodwill following capitalization method, and I have explained how to calculate goodwill following super profit method. So I'll be using the same slide which I had explained how to calculate goodwill following super profit method to calculate the capitalization method also. So there is a slight difference in the formula to calculate goodwill following capitalization method, and this is the formula. As you can see, capitalization method or a goodwill following the capitalization method is capitalized value minus net assets of business. In order to calculate goodwill following capitalization method, one need to first calculate capitalized value and calculate net assets of business. But before calculating it, we need to understand what is capitalized value and what is net assets business. Not wasting much of the time, you need to understand how to calculate capitalized value of the business, because as we saw that in order to calculate capitalization goodwill or goodwill following capitalization method, one need to calculate capitalized value. So now the question is how to calculate capitalized value of the business. So in order to calculate capitalized value of business, we need to first calculate the average profit of the business. As you can see, for 3 years average profits can be calculated. Likewise, average profit can be calculated for the number of data which can be given in a question, or which a business can give the data in the annual reports. So the first step will be, we need to calculate capitalized value of the business on the basis of average profit. And as I've already discussed, average profit can be calculated following both the simple average profit or weighted average profits. And other thing which we need to understand is what actually is net assets of business. So I've already discussed what is assets in the previous video on accounting made easy series video. So when we deduct creditors or any sort of certain liabilities from the assets, we'll get the net assets of business, which I'll be discussing in the next slide also. So coming back to capitalized value, in order to calculate capitalized value of the business, so the formula is average profits into 100 whole divided by normal rate of return. So I also have discussed what is normal rate of return. Normal rate of return is the rate of return which the capital earns, which the investor had invested. So let us try to understand it looking into one of the simple question. But before we move on to the another question, we need to understand that assets, while calculating assets, we need to exclude the fictitious assets and goodwill, because we are calculating goodwill. Say this is an illustration. You read the questions properly. Calculate the value of goodwill following capitalization of average profits method using the following data. So out here in this question, average capital employed is rupees 5 lakh, and 3 years net trading profit is also given. So the rate of interest expected, so this is the normal rate of return which is expected, is 15% in this situation. and the asset value excluding goodwill is 5,54,000. Sundry liability is also given, which is 31,000, and fair remuneration to the partners also is given for these services, which is 12,000 per annum. Before we directly solve this kind of problem, I suggest that one need to understand or have a picture relating to this data, so it will be very easier to solve the problem. Moving on to next slide, let us calculate the goodwill following the average profit method. So this goodwill can be calculated following the weighted average profit method also, or or capitalized method can be used for the super profit method also. And I'm just opening the same picture which I had used to explain the basics of accounting. And according to the question, the capital in this business was rupees 5 lakh, as you can see, and the net profit for 2017 was 1 lakh 47,000. In 2018 it was 1 lakh 48,000, and 2019 it was 1 lakh 52,000. So according to the question, the expected rate of return is 15%. Now the idea is we need to understand what to how to adjust remuneration of partner also. According to the question, the remuneration of the partner is 12,000, so this need to be adjusted with the net profit. And before that, we need to calculate the average profit. As I've already explained, average profit is adding 3 years net profit and dividing by 3. If it is 4, we need to divide by 4, but we are following simple average method, not the weighted average method. That is a different method. So this remuneration of the partner has to be deducted from the average profit, so that we can calculate average future profit. So average future profit is 1,37,000 after deducting the remuneration of the partner, which is 12,000. And we need to calculate the capitalized of value. So I've already explained that capitalized value can be calculated by multiplying the rate of interest 100 by 15 into 1,37,000, which we have calculated after deducting remuneration from the average profit. So this way we can calculate the capitalized value, and the capitalized value is 9,13,333. The next step is we need to calculate the net asset value of the business, because the formula to calculate goodwill following the capitalization of average method is capitalized value minus net assets of the business. So we have as we have already calculated capitalized value, now we need to calculate the net assets of the business. So the assets of this business excluding goodwill is 5,54,000. So we need to deduct creditor, which is 31,000. After deducting 31,000, the value of the net assets of the business is 5,23,000. So calculating goodwill is very much simple. Capitalized value, which is 9,13,333 minus net assets of the business, which is 5,23,000, will get the goodwill. So calculating goodwill following the capitalization method I've explained, this is one of the simplest method. And we need to understand various adjustments given in the question also, but for that we need to be aware about the basics of accounting, so it will be very much easier to understand the various adjustments. So I hope you have understood it. Any doubts you have, you write it down so that I can explain it more in a simpler way. So in order to make you understand, this is the step before calculating the capitalization of average methods. So step 1, you need to calculate the average future maintainable profits, and this average profit can be calculated following both the average simple average and weighted average, and if some adjustments has to need to be done in this profit, that need to be either deducted or added. And step 2, we need to calculate the capitalized value of business on the basis of this average profit, which is step 1. And step 3, we need to calculate the net assets. Net assets is very simple: total asset minus you know uh, outsiders liabilities. We can calculate net assets. So when calculating goodwill, net assets of the business needs to be deducted by the capitalized value. So this is the step which you can summarize, so it can be easier for you to when solving the problems. But when you are solving the problem, you need to have a picture of it so that it will be easier and understandable also. So I hope this video was helpful and you're able to understand it. Till the time, stay safe and take care.